Hello everyone, my name is Zach and welcome to On Cashflow, where I help you become a master of your own cash flow. Now let's get started. Today we are going to be talking about how you can pay for health insurance in early retirement, in financial independence. And one of the ways that is relatively new is using the healthcare.gov marketplace. And when you're using the healthcare.gov marketplace, you are using basically a tax credit known as the premium tax credit. And this is a tax credit that is paid upfront for the year that's following. And it pays for the health insurance premiums up to the amount that you qualify for the tax credit. And then you pay the difference, however much that health insurance costs. The premium tax credit can significantly decrease the amount that you pay out of pocket for health insurance. And I'm going to walk you through an example right here using pretty much my income and my location. So first thing you're going to do is you can go to healthcare.gov/CTAC plans, and that's how I got to this website. I can go ahead and enter my zip code right here, and I'm going to blur out what it is so you don't see what it is. I'm not ready to reveal my location, but it is in Tennessee. Continue there. And then this is the estimate plan, and it's pretty much going to be the same when you're actually enrolling in it. First, what you're going to do is you're going to tell them about your household, so we can start there. If you're already enrolled, you can enter a plan ID, but I always skip this because we're just going to look at what all of our options are. For my household, it's going to be myself and my spouse, so I'm going to put you and other people. Continue there. And then it's going to ask if I am married. So in my example, it is yes. And then it's going to ask if I'm going to claim any other dependents on my tax return. In this case, I don't have any dependents right now. So for 2025, I'm going to put no. And then you're going to enter your age and your sex. And then you got to click on what of these options apply to you. So right now I am 30 years old, 30 years young, right? And I am a male. And then these options right here. If you're eligible for health insurance coverage through a job, Medicare, Medicaid, or children's health insurance plan, something like that, then you would click that and that could make you ineligible. So I am not. And then if I'm a legal parent or guardian of a child under 19, I am not. I'm not pregnant and I am not a tobacco user. So I put none of these. And then I'm going to fill out the same thing for my spouse. She is 1 year younger than me. So she's 29. She's a female and none of those apply to her as well. So then it's going to have you confirm that. So 30, 29, male and female, confirm. And then you're going to put what you think your household income is going to be for 2025. Now, there is a way that you can calculate what your household income is, and they have it right here. You can see how they want you to estimate it. But basically, they're going to take your AGI, your adjusted gross income, and then they're going to have you add back a few of these things over here. But in most circumstances, it's going to be what your AGI is going to be. That's what they're going to base this amount, like your credit, based on. For me, I'm going to put an estimate, just a general estimate of, let's say I'm financially independent and I'm living on $40,000 of income per year. This is $40,000 on my AGI. So I could be actually spending much more than this, but my adjusted gross income would say $40,000. So that's what they're going to base off of the premium tax credit. So let's continue with that, $40,000. They estimate that I'm going to get a premium tax credit of $837 per month. That is for both my spouse and I. So then we can go ahead and check out what their plans are, what some options are for the health insurance. And then they tell you how you can do it here. So you can see that they have 38 options here. And then as you scroll down, it shows the different plans. So some things that you definitely want to look at is, first, here's the premium. So it says, here's your tax credit. And this is how much it would be if both of you enrolled in that plan. So the tax credit is worth more than how much the plan costs. So your out-of-pocket would be $0 per month. Another thing you definitely want to take into consideration is your deductible and your maximum out-of-pocket cost. This is the maximum total out-of-pocket that could possibly happen in one calendar year if both your spouse and you had a worst case scenario. This is the maximum you would pay out of pocket. I'm not going to dive into too much on every single detail here because there definitely is a lot of details. But let's take a look at how we can look at some of the different options here. So one thing that I like to do is I personally like to have an HSA plan because I'm young, I'm healthy, and I want access to that health savings account. So you can go right here and add a filter. And wouldn't you know it, they have a specific filter for HSA. You can click eligible for an HSA and apply the filter. And this year, unfortunately, I only have one option for an HSA. Last year, I think I had like 3 different options. But this year, I have one option for an HSA here. If I think this plan is good, I can see right here, it's $735 per month. But you can enroll in different plans. So you don't have to enroll the exact same plan like your spouse and you. So I could pick this plan. So my premium would be half of this $735. And then I could pick a different plan for my wife. So we can go back here. I can exit out of this HSA. Let's say that I want her to have a different plan than an HSA. So I can exit out here. I can go back to the filters and I can put like, hey, I want the premium to be between this. I want the deductible to be between this. Or what you can also do is, so they have these different categories and it's supposed to basically represent how much health insurance coverage you have, right? So bronze is the lowest, silver is the medium, and then gold would be basically, it has the highest premiums, but the insurance pays for the most things. So that's kind of supposed to be the idea between bronze, silver, and gold. If you want to look at a silver plan, you can go to there and you can apply the filters and it will show you just what the silver plans are. So you see the plans went from 38 to 15. So now there are 15 plans that fall under that silver category. For example, it's a little bit more expensive at $898, but that would be for 2 people. So you can take half of that and you can estimate how much it would be for one person, and you can add half of what the other plan would be, let's say the HSA plan, and you can see what the total amount would be. Because so the total amount of tax credit that you qualify for, in this case, it would be $837. It doesn't have to be half and half per person. It's one credit for both spouses. So it's one credit for the entire tax return. You can apply that to the half of the cost of one plan and half to the cost of another plan. So if you chose 2 different plans and they added up to less than $837 per month, because that's how much the tax credit qualified for on $40,000 of income, your premium would actually be $0 per month. And if it added up to more than that, then you would just pay the difference. If it added up to $1,000, then you would pay the difference between $1,000 and $837. You would pay that per month. That would be your out-of-pocket cost for the premium. Now, it's important to note here that the ACA subsidies, what it's known as, the Affordable Care Act subsidies, is currently set to sunset at the end of 2025. What we just looked at here is how much of the tax credit would be eligible in 2025. However, currently it is set to end in 2025. So there is no ACA subsidy in place for 2026. And so that is one thing we are going to be looking out for. Is this going to continue? Is Congress going to extend these credits, or is it going to actually sunset and there's not going to be any more healthcare.gov premium tax credits? I don't know the answer to that. But currently, if someone was living a financially independent lifestyle and they had a modest amount of spending, this is one way that they could have paid for those health insurance premiums at a very low amount out of pocket. And this is just one part of financial independence, of retirement, and just life in general. There is uncertainty. We don't know what's going to happen after 2025. We don't know if it's going to stay the same, if the subsidies are going to decrease, or if they're going to actually become more generous. We just don't know. But that is one trade-off that you have to accept. Uncertainty. If you enjoyed watching this video and seeing the healthcare.gov in action, then please make sure you hit the like button on this video because it really does help me out and I really do appreciate that. Thank you so much for watching this video. I'm Zach from OnCashflow.com and I hope to see you next time.